One of the most important things to recognize right now is just how rare this period actually is, especially for XRP. When you step back and look at historical data instead of day-to-day price movement, a very clear picture starts to form. Since 2013, there have only been a handful of moments, literally 6, where XRP reached this level of extreme oversold conditions. That alone should pause people for a second. Even more important is what happened after those moments. In every previous case, within a few weeks, price was not lower than where it was at the point of maximum stress. That doesn't mean price can't dip briefly or that volatility suddenly disappears, but historically speaking, these levels have marked the later stages of downside pressure, not the beginning of it. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused as you surely don't want to miss out on this. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. This kind of environment represents peak emotional pressure. It's the point where confidence is weakest, narratives are darkest, and most participants feel unsure about what comes next. That doesn't automatically mean a reversal happens overnight, but it does suggest we're operating in territory that rarely lasts long. Extreme fear tends to cluster near turning points, not during long, quiet declines. This is exactly why seasoned investors often emphasize emotional discipline during periods like this, not because it feels easy, but because it almost never does. Another data point that adds context here is XRP's performance relative to Bitcoin. Normally, when markets sell off, XRP weakens faster than Bitcoin. That's been the historical pattern for years. But what we're seeing now breaks that pattern. Despite broad market pressure, XRP has been holding its ground against Bitcoin and, at times, even strengthening. That matters because it suggests this downturn isn't specific to XRP itself. Instead, it points to a broader market-wide de-risking phase. When an asset holds relative strength during stress, it often signals underlying confidence, even if price action doesn't feel encouraging in the moment. This relative resilience is especially notable given the timing. At the same time, XRP is showing historical oversold conditions. Major developments are unfolding at the fundamental level. Regulatory clarity discussions, infrastructure expansion, and institutional positioning continue to move forward, even while price remains under pressure. That combination, strong fundamentals paired with extreme pessimism, is uncommon, and it's typically what defines late-cycle drawdowns rather than early ones. Emotionally, this is one of the hardest phases of any market cycle. It tests patience, conviction, and perspective. What people are experiencing now isn't a small dip or routine volatility. It's one of the more intense stress events XRP has seen across its entire history. That context matters, because surviving moments like this is often what separates long-term participants from short-term speculators. These periods don't feel rewarding while they're happening, but they're often remembered later as defining opportunities. So what actually caused this downturn? There are two main explanations circulating, and they aren't mutually exclusive. The first centers on a large-scale deleveraging event tied to earlier market disruptions. According to commentary from respected industry figures, a major exchange-related technical failure earlier in the cycle may have triggered forced liquidations on a massive scale. While the initial shock happened quickly, the after-effects appear to be unfolding slowly over months as firms unwind positions, close exposure, and reduce risk. In other words, the crash wasn't a single moment. It was the start of a prolonged cleanup process. When leverage unwinds at this scale, price doesn't recover immediately. Capital exits quietly, positions are restructured, and volatility remains elevated long after headlines fade. This kind of delayed impact aligns closely with what we're seeing now: continued pressure without obvious news catalysts, driven more by structural mechanics than sentiment alone. The second factor involves macro uncertainty, particularly around monetary policy expectations. Markets tend to react strongly to uncertainty, even before concrete changes happen. While some fear tighter conditions, others argue the opposite, that policy direction may ultimately become more supportive for growth assets. Historically, markets often overreact to uncertainty first, then reprice once clarity emerges. That transition phase can be uncomfortable, but it doesn't last forever. Looking ahead, one potential catalyst stands out: regulatory clarity. Prediction markets are increasingly assigning higher probabilities to clear regulatory frameworks being finalized within a relatively short time frame. As those probabilities rise, markets typically begin pricing that certainty in advance. Regulation removes unknowns, reduces systemic risk, and attracts sideline capital. For assets like XRP, which sit directly at the intersection of regulation and infrastructure, that kind of clarity can be transformative. What seems to be happening beneath the surface is a quiet reset. Excess leverage is being removed, weaker participants are exiting, and stronger hands are absorbing supply during stress. Retail sentiment is fearful, institutional positioning is cautious, and volatility is doing what it always does during transition periods: shaking out conviction. This doesn't mean the process is finished, but it does suggest we're far closer to the end of this phase than the beginning. We've seen moments like this before. They're rare, dramatic, and emotionally exhausting. Each time they feel unprecedented while they're happening. And each time, once the dust settles, the narrative shifts from fear to reflection. The key lesson from past cycles is simple. These events don't signal the end of strong assets. They test belief in them. And while no one can time exact bottoms, history shows that extreme stress phases eventually give way to recovery once the underlying system resets. This phase won't last forever. It has a cause, it has a structure, and it has an eventual resolution. Understanding that doesn't remove the discomfort, but it does restore perspective. Markets move in cycles, and moments like this are part of that rhythm. The path forward won't be straight, but it rarely is. What matters is recognizing where we are in the process, and right now, all signs point to a late-stage reset rather than the start of something worse. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.